Hey everyone and welcome back. Get ready, because we're about to take a deep dive into Vedanta Limited's Q2 results for fiscal year 2024-25.
Yeah, and we've got some really interesting stuff to unpack here.
You know it. We've got their press release and investor presentation. Should be a fun one.
Definitely. And, I think what's really cool about these documents is they give us more than just numbers. We get a peek into Vedanta's strategy, their sustainability efforts, even hints about their plans for the future.
Okay, well, I can't wait any longer. Let's jump right in. That headline figure, Vedanta reaching its highest ever first half EBITDA. A whopping 20,639 crore.
Whoa, yeah, a 46% jump compared to last year.
Talk about a winning streak. But for those of us who aren't financial experts, what does EBITDA actually tell us?
Well, EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It basically shows you how much profit a company is making from its core operations, before all those other factors are taken into account.
So this growth means,
It means Vedanta is really good at generating cash, and that cash can then be used to, reinvest in the business and drive even more growth.
reinvesting and growing. I like the sound of that.
Yeah.
And it wasn't just the first half that was impressive. Q2 itself was stellar. 10% year-on-year revenue growth,
44% surge in EBITDA.
plus a 34% EBITDA margin. Now, I have to admit, I'm not entirely sure what that means in practical terms. Can you break that down for us?
Sure. It basically means that for every Euro 100 Vedanta brings in, they're keeping 34 as profit.
Oh, wow. So a pretty hefty chunk of change.
Exactly. That kind of margin usually indicates they're running a tight ship, keeping costs under control. It's a good sign for investors.
Okay, well now, let's talk about the less glamorous side of things, debt. Not the most exciting topic, I know.
True, but it's super important for understanding a company's overall financial health.
So what's the story with Vedanta's debt situation?
Well, the good news is they've managed to reduce their net debt by about 4,400 crore since June 2024.
Okay, so they're trimming the fat, so to speak.
Exactly. And that's brought their net debt to EBITDA ratio down to its lowest point in 6 quarters, which is definitely a positive sign.
Less debt, better ratios. Sounds like they're on the right track.
They've also been pretty smart about their fundraising. They raised a cool 11,633 crore through a QIP and an OFS.
Now, I have to admit, those acronyms sound a little intimidating. Can you explain what those are for the average person like me?
Sure. A QIP stands for Qualified Institutional Placement. Basically, it means they're selling shares directly to big institutional investors. And an OFS, an offer for sale, is where they offer existing shares to the public.
Okay, so it's all about bringing in fresh capital.
And it sends a good signal to the market that they're proactive about managing their finances.
Right, so they're not just cutting debt, they're also bringing in new money. Sounds like a good combination.
Absolutely. Plus, their parent company issued $1.2 billion in bonds, which helped slash their debt to its lowest level in a decade. So yeah, they're taking financial health seriously.
That's reassuring to hear. But all this financial talk makes me wonder, what are they actually doing with all this cash? I mean, are they just letting it sit there, or are they putting it to work?
Well, that's where things get really interesting. Let's look at their operational performance. They're heading record-breaking production numbers across the board. Aluminum, zinc, iron ore.
Really? Across the board. It's like they've discovered some secret formula for success.
Well, consistent growth and optimization are definitely part of it. You can tell they're focused on maximizing the output from their operations.
So give us some specifics. What kind of numbers are we talking about?
Well, for example, their aluminum segment hit an all-time high for first half production at 12,205 kilotons. That's a 3% jump compared to last year.
And zinc.
Zinc India is celebrating an all-time high too. 524 kilotons produced, up 5% year on year.
Those are some serious numbers. But hold on, didn't they have a planned shutdown in their steel segment? Does that affect things?
Yeah, they did have a planned shutdown for steel production,
Yeah.
mainly for maintenance and debottlenecking.
Debottlenecking, what's that?
It's basically like taking your car in for a tune-up. Sure, it's out of commission for a bit, but in the long run, it ensures everything runs smoothly.
So a strategic pause rather than a major setback.
Exactly. It's all part of the plan.
Okay, that makes sense. But these days, profits and production aren't the only things that matter. Investors and consumers want to see companies operating sustainably. How does Vedanta measure up on that front?
That's a great question, and it's clear Vedanta is taking it seriously. They're making some big moves in renewable energy, especially with their recent 80 milliW power delivery agreement.
80 megawatts. That's pretty impressive.
It brings their total commitment to renewable energy to over 1900 milliW.
Wow, 1900 megawatts. They're really putting their money where their mouth is when it comes to
Yeah.
sustainability. But can you explain what these power delivery agreements actually mean?
They're basically long-term contracts that guarantee Vedanta a steady supply of power from renewable sources. So, less reliance on fossil fuels, a big step towards their sustainability goals.
Makes sense.
Yeah.
And it seems like it's not just about the environment for them either. I read something about their efforts in other areas of ESG, right?
Yeah, environmental, social, and governance. It's becoming super important for attracting investors these days. And Vedanta is definitely making strides in areas like gender diversity and community engagement. They even got a top ranking in the S&P Global CSA assessment.
Okay, so they're hitting it out of the park financially, they're optimizing their operations, and they're embracing sustainability. It's like they're checking all the boxes.
They are. It paints a pretty impressive picture. But there's more.
Okay, I'm all ears. What else can we glean from these documents?
Well, there's talk of a transformative second half of the year, mainly because they're launching some major growth and integration projects.
Ooh, that sounds intriguing. What kind of projects are we talking about?
The documents don't give too many specifics. But knowing Vedanta, it could be anything from expanding their current operations to tapping into new markets, maybe even further integrating their different businesses to boost efficiency.
So they're not resting on their laurels, actively shaping their future and positioning themselves for continued success. And of course, we can't forget about the elephant in the room, that whole demerger process that's been in the works.
Ah, yes, the demerger. A bold move with the potential to redefine Vedanta.
Definitely. Can you give us a quick rundown on what a demerger actually means and why it's such a big deal?
Well, in simple terms, a demerger means splitting a company into separate entities. You could think of it like a family business deciding to divide its assets among the siblings.
So for Vedanta, that could mean separating their different business units into independent companies.
Precisely. Now, there are various reasons why companies choose to do this, like unlocking shareholder value, focusing on specific business segments, or just streamlining operations.
Gotcha. So it's a pretty significant undertaking. It must involve a lot of moving parts.
For sure. It's complex. The success of a demerger really hinges on how well they manage the transition and how the market reacts.
Makes sense. And where does Vedanta stand in this whole process?
According to the documents, they're in the final stages. Shareholder and creditor meetings are coming up soon, which are pretty crucial for finalizing the separation.
So it sounds like Vedanta is on the brink of a major transformation. Not only are they delivering strong financial performance, they're also making bold strategic moves that could ripple across the entire natural resources sector.
It's definitely a story worth watching.
Well, we've covered a lot of ground in this first part of our deep dive, from financials and operational triumphs to the ins and outs of demergers. But buckle up, because we're not done yet.
Oh, there's more.
In the next part, we'll dive even deeper into Vedanta's investor presentation. We'll check out those visuals and get a better sense of the inner workings of this fascinating company.
Awesome. Can't wait. Welcome back, everyone. We're ready to take our Vedanta exploration to the next level. We're going to dive into their investor presentation.
Oh yeah, those presentations can be a bit dry sometimes. Hopefully this one is a bit more engaging.
Well, actually, this one is full of insightful visuals, charts and graphs that really bring those numbers to life.
Okay, I'm always a fan of a good chart or graph.
Mhm.
Helps me wrap my head around things.
Yeah.
So what kind of visual treasures did you find in this presentation?
Well, one of the first things that jumped out at me was this breakdown of their EBITDA growth by segment. And get this, almost all of their businesses are contributing to this record performance.
That's got to be a good sign, right? It means they're not putting all their eggs in one basket.
Exactly. That diversified portfolio definitely gives them more resilience. And they have this great chart showing the key drivers of their EBITDA growth. Favorable commodity prices, their cost-saving initiatives, and increased premiums, they've all played a role. It's like multiple engines powering this growth.
That's pretty cool. A well-oiled machine, eh? Speaking of well-oiled, let's go back to their debt management for a second. They made some impressive progress there.
Totally. The presentation really breaks it down, shows how they've consistently reduced their net debt over the past few quarters. And what really stands out is their healthy cash and cash equivalents position. They've got a nice safety net there.
It's like having a comfortable savings account, right?
Exactly. It gives them peace of mind. They can invest in growth, weather any market storms that come their way, maybe even reward their shareholders. And speaking of investing in growth, the presentation sheds light on their capital expenditure plans, too. Basically, how they plan to spend that money. And it's clear they're in growth mode, lots of investment planned across their various business segments.
So they're not just hoarding cash, they're strategically deploying it to fuel their expansion.
Right. That kind of proactive approach always gets investors excited.
And of course, we can't forget about ESG. That's becoming a pretty big deal for businesses these days.
Huge. And Vedanta is definitely on board. They've got a whole section of their presentation dedicated to it, showcasing all their initiatives in things like renewable energy, gender diversity, community engagement, you name it.
It's great to see them taking a holistic approach to ESG, weaving it into their core business strategy.
Yeah, it's not just an afterthought for them. It's a smart move, really. It tells investors and stakeholders that they're committed to sustainable and responsible growth, which is crucial for building trust and attracting long-term investment.
You know, I'm a bit of an operations geek, and something that really caught my eye in the presentation was their emphasis on operational excellence. Lots of detailed charts showing their production figures, cost of production trends, operational highlights across the board.
And they're all about continuous improvement. They're constantly looking for ways to optimize their production processes, lower those costs, and just be more efficient overall.
So what are some examples of those efforts? What are they doing specifically?
Well, for instance, they're working on simultaneously increasing production and lowering the cost of production, especially in their zinc and aluminum businesses.
No, that's a winning combination. Higher production means more revenue, and lower costs mean higher profits.
Precisely. They're basically writing the recipe for business success.
I like it.
Right.
And it looks like they're not just relying on old school methods either. They're making some strategic investments in technology and innovation to further enhance their operational performance.
Yeah, they're embracing things like digital solutions and advanced analytics, using them to improve their decision making, streamline those processes, and just generally boost efficiency.
It's like they're building a smarter, faster, more efficient business from the ground up.
Exactly. And, it's not just about keeping up, it's about leading the pack, shaping the future of the natural resources sector.
Yeah.
Which brings us back to their bold demerger move. That's something that could really shake things up.
Totally agree. The presentation doesn't get into all the nitty-gritty details of the demerger, but it does make it clear that it's on track and moving towards those final stages we talked about earlier.
And they provide a helpful snapshot of their current group structure, showing all the different listed and unlisted entities within Vedanta Limited, kind of like a family portrait of the Vedanta empire.
It definitely helps you appreciate just how complex their operations are and how they might function as separate entities after the demerger.
Exactly. Gives you a better sense of the scale of things.
Okay, well, let's zoom in a bit now. Can we take a closer look at some of their individual business segments?
Absolutely. The presentation does a nice job breaking down each segment, their financial performance, key operational highlights, and future outlook. They start with aluminum, which is a major growth engine for them. As we touched on earlier, they've hit record production numbers.
Driven by strong demand and those efficient operations they're known for.
Exactly. And they're not just churning out raw aluminum, they're also focusing on those downstream value-added products, which typically have higher margins.
So they're strategically moving down the value chain to capture more profit potential.
Precisely. They even break down their aluminum profitability, highlighting how those higher premiums and their cost management strategies are paying off.
So they're not just riding the wave, they're creating their own success. Now, what about zinc? They've been boasting about those impressive zinc production figures as well.
Oh, yeah, their zinc business is booming. Record production for both mined and refined zinc, and their cost of production is at a multi-year low.
Impressive. What are they attributing that success to?
They say it's a mix of operational excellence, cost-saving initiatives, and favorable market conditions. And get this, they're also focusing on developing next-generation zinc-based batteries.
Zinc-based batteries. That's pretty forward-thinking. I've heard those are being explored as an alternative to lithium-ion batteries.
That's right. Vedanta is positioning themselves to capitalize on that emerging market.
Okay, let's switch gears now to their oil and gas business. This one's a bit different, right? Unlike their other segments that are thriving, oil and gas face some challenges this quarter.
True. Their oil and gas production did decline year on year, mainly due to a natural decline in their mature fields. It's like an aging athlete, they start to slow down a bit.
But they're not just throwing in the towel, are they?
Not at all. They're actively investing in new growth projects, things like infill drilling and offshore exploration. They're also working hard to reduce operating costs and improve efficiency, which is really important in today's volatile energy market.
So they're taking a long-term view, investing in the future of this segment.
Exactly. It's all about adapting to the changing energy landscape.
Makes sense. What about iron ore and steel? How did those segments perform?
Well, it's a bit of a mixed bag. Iron ore production is up, but steel production took a hit because of that planned shutdown for maintenance and debottlenecking.
Right, that temporary pause to ensure long-term efficiency.
Exactly. And even though steel production was down, their iron ore business is doing incredibly well. Strong demand from both domestic and international markets.
Good to know. And they're not just selling raw iron ore, are they? They're adding value, too.
Yep. They're focusing on their value-added business, producing things like pig iron and other processed iron or products. Helps them capture more of the value chain and increase those profit margins.
Smart strategy. It's all about staying ahead of the game. We should also touch on their other businesses, Faycore and their copper segment, right?
Of course. Faycore, their ferrochrome production business, has been a star performer. Production and profitability are up significantly. They've also secured environmental clearance for a major expansion project.
That's great news. Sounds like they're capitalizing on the increasing demand for ferrochrome.
Definitely. And their copper production is also steadily increasing. They're making a real effort to secure those long-term copper concentrate supplies, which is essential for consistent production.
Especially with all the uncertainty in the world right now.
Exactly. It helps them manage price volatility.
So it seems like Vedanta is doing everything right. Optimizing their core operations, exploring new growth opportunities, and securing a steady supply of raw materials. They're thinking strategically, setting themselves up for success in the long run.
They are. It's impressive to see.
Well, we've really dug deep into their investor presentation today, uncovered some valuable insights along the way.
Absolutely. It's been quite the journey. But before we wrap things up completely, what are your final thoughts on what we've learned about Vedanta? What does it all mean for the average person trying to understand the business world?
That's a great question. I think the biggest takeaway is that Vedanta defies easy categorization. They're not just a mining company. They're not just a metals producer. And they're not just an energy player.
Yeah, it's like they're this multifaceted gem, with all these different sides reflecting their diverse operations and strategic vision. And every one of those facets contributes to their overall brilliance.
I love that analogy. They're constantly evolving, innovating, adapting to this ever-changing global marketplace. And they're doing it all while prioritizing sustainability, showing a commitment to responsible growth.
So what's the key message here for our listeners, for anyone who's trying to make sense of Vedanta and, the trends that are shaping the business world in general? I think Vedanta provides a really powerful example of how companies can thrive in today's complex and challenging environment. It's not just about profits, it's about operating ethically, embracing innovation, and having that long-term vision.
Yeah, it's about finding that balance,
Hmm.
where financial success meets sustainability and a genuine desire to make a positive impact.
Exactly. Vedanta is proving that you can do well by doing good.
Well, we've certainly covered a lot of ground in this deep dive, from financials and operations to demergers. It's been quite the ride.
It has. We've explored the big picture and the small details. I think we've painted a pretty good picture of Vedanta, a company that's both ambitious and responsible.
And I have a feeling we're seeing the beginning of their story. They're clearly a company that's on the move, and I can't wait to see what they do next. But before we close the book on this deep dive, I want to leave our listeners with one final thought, a little something to ponder.
Ooh, a cliffhanger. I'm intrigued. What is it?
Given Vedanta's aggressive push into renewable energy and their commitment to sustainable growth, how might their actions influence other companies in India and beyond? Could they be a trendsetter?
That's an excellent question. It really gets at the heart of how one company can have a ripple effect, impacting an entire industry or even the world.
It'll be interesting to see if they spark a movement, if they inspire other companies to step up their sustainability game.
Definitely something to keep an eye on. But for now, we've reached the end of our Vedanta deep dive.
It's a story worth following for sure. But for now, we've reached the end of our Vedanta deep dive.
It has been a journey.
And as always, we want to encourage you, our listeners, to go out and do your own deep dives. Whether it's Vedanta or another company that sparks your interest, there's a whole world of information out there waiting to be uncovered.
Yeah, absolutely. And remember, you don't have to be a financial expert to do this.
Exactly. It's all about being curious, asking questions, connecting those dots and seeing how these companies fit into the big picture.
It's like solving a puzzle. You piece together information from different sources, and suddenly you have a much clearer picture of how things work.
Yeah. And you never know. You might even uncover something that nobody else has noticed. That's what makes this so exciting.
There's always something new to learn, always a new angle to consider.
Okay, well, before we officially wrap things up, I want to circle back to something we talked about earlier, Vedanta's ambitious demerger plan. It's a big move, could have a pretty significant impact on the company and the entire natural resources sector.
I agree. It's a potential game changer, and it raises some really interesting questions.
Like what?
Well, for instance, how will this demerger affect Vedanta's overall valuation? Will it actually unlock shareholder value like they're saying, or will it just create more complexity and uncertainty?
Hmm. Yeah, good points. It's like watching a high-stakes chess game unfold.
Exactly. And we'll have to wait and see how investors react. Will they be on board with the new structure, or will they take a more cautious wait-and-see approach?
Only time will tell, but it's a bold move, for sure. It shows that Vedanta is willing to adapt and evolve, not afraid to shake things up a bit.
And that's a valuable lesson for all of us, right? Sometimes you have to take those calculated risks. You have to embrace change if you want to achieve your goals.
Absolutely. Vedanta just might inspire other companies to rethink their own structures and strategies.
Yeah, maybe we'll see a wave of restructuring and innovation across the entire industry. Now, that would be something to see.
It would. But for now, we've reached the end of our deep dive into Vedanta Limited.
We hope you enjoyed the ride.
We've covered a lot of ground, from financials to operations, even those complex demergers. It's been quite a journey.
And hopefully you've gained a better understanding of this company, the natural resources sector, and just the broader business world.
Remember, knowledge is power. The more you know, the better equipped you'll be.
So keep exploring, keep asking questions, keep diving deep.
Thanks for joining us on the deep dive.
Until next time.